Okay, now I need to switch on to the microphone. Okay, there you go. Okay, welcome guys, welcome. And sorry I'm late, but I just wanted to leave it a couple of minutes to await more people, but it seems like we need to get a move on and start first. So welcome to Sunday's commodity talk and session, and we'll be paying a lot more attention to crude oil as well as other commodities that are in focus by traders out there. So today is the 4th of July, and welcome to Bretton's Sunday's session or webinar. And let's get a move on and look at crude oil first. There may be a lot of questions about crude oil, but all I can say is that there's been a bit of a delay. There's some political sort of agenda in dragging on the meeting. So the meeting was dragged on from Wednesday to Friday, and a couple of things that they are actually deciding. There's a bit of a limbo at the moment between supply and demand. Demand is increasing, and then decisions are to be made on whether or not they want to increase or decrease the production, basically. But also there is a bit of a risk at the moment with, when they do these kind of meetings and decisions, especially with OPEC Plus, there is always a possibility of some not very happy parties or countries that want to do it their way and not really very happy with decisions made by the Middle Eastern bloc, basically like Saudi Arabia or, all the other countries that have more power in the OPEC Plus or OPEC in general. So sometimes certain things can happen and then it may drop the price of oil, like what actually happened, I think, last year, where in March 2020, if I'm not mistaken, we had Russia just pulled out and not very happy with the decisions. And then that actually plunged the oil prices quite a lot. So that basically could also happen at this moment of time because of the tension at this moment with the demand really increasing with a Delta variant has caused a big lockdown in Australia especially. And all these Delta variant surges together with, all these current lockdowns and various other things have also increased the travel side of it, and the demand for oil keeps increasing. So in other words, if we are looking at the US oil, as it stands on Friday, we experienced some fall. I think it's about 6 cents or so on the US oil, and on the UK oil, it was a surge. It was an increase of about 33 cents. So, I mean, in general, we are looking at commodities are rising quite a lot. I just want to share this here as well. I mean, here we have got still a lot of optimism and positivity on crude oil specifically, but in general, when we talk about corn, we talk about ethanol, we talk about all the commodities. Sorry about that. And we see that they have actually risen quite a lot. So commodities work in a way where maybe some would be slower to follow up the rise, but then overall the rise would actually mean that it's a ripple effect to impact a rise in general in terms of commodities. So there is also some strategy shift from China and various other things. So this is what has actually been brewing as well. We've got soybean. I mean, soybean is really interesting. The largest producer is the US. The largest buyer is actually China. And you would think that China would actually have the most soybean and exporting it, but the quality of the soybean that's needed by majority of the world, including China, is actually grown in the States, and its quality is really, one of its highest, and that has contributed to the highest sale of soybean from the States. So this is quite interesting to look at the dynamic of various other things. And then now US is also producer of shale oil as well, which has its own economy as well. So we're talking also about corn and copper and oil, crude oil in general, and they have all been actually on the upside and expected to actually grow even more. But now, where we are now is a little bit of a limbo, and this limbo is contributed by the decision of whether or not to increase the production, because the demand is just going very crazy at the moment for crude oil, especially WTI. And with that, I think they may not have a lot of choice but to have the price to actually go up much more in order for the economics of oil to benefit most people. If it drops a lot more at this stage, it might actually be a bigger loss for the oil producers, because if we look at as of Friday itself, the oil and gas rig count has actually increased tremendously. So that basically means that they are more looking at production to increase the production. But usually if you increase the production a lot, then the price would actually fall. But at this moment of time, what is going on in the market is that even if they increase the production, it is still not enough, insufficient to actually meet the demand. So they can increase even more, and it still will actually be contributing to the price rise of oil. This is what I believe, and I see that that is where the possibility lies in terms of oil at this moment of time, crude oil. So if we look at US oil prices itself, it was trading at 74.55, closed at 74.55, $74.55. As you can see right here on, but this is on CFD, of course, US oil on MT4 platform. And here we can see that it is in the rise, it is in within I'm looking at the monthly chart, of course, but then it is in within the bullish zone. It is within the bullish zone, but also at the same time, um, it has created a little bit of a wick right there. So there may be a potential of a reversal, and that reversal could actually be contributed by this area right here. And this is a resistant area. So whether or not we will find that, we can actually just also use the RSI in a way for trend line. And if we take that one there, we look at this here in terms of trend line itself. If I draw a downward type trend line right here following this, that means that it is quite high up there to actually come down and break this downward trend line to come down. So there is still a lot of space, especially in the monthly chart, as well, for price to actually go up. If I do a trend line from here, this touch point, an upward trend line as well, all the way up, you can see that it is, not very close to breaking this unless it starts to come down a lot more and break this purple upward trend line. Then you can say that, okay, it's got the possibility of a reversal as well. So right now, in terms of price action, there may be a reversal coming down. So we need to actually be quite careful with our buy. Our current buy at the moment for oil should actually be limited just for now, because mainly there may be a potential of a reversal. If I go onto the daily chart, for example, you can see that the daily chart or shorter time frame has already signaled weakness to the upside. And overall, it is still strong, still quite clear on the upside move on oil in general, but there may be a potential reversal at the moment. If we go on to stochastics as well, so we are just trying to match up what we see visually onto the chart with what are the potential news and things that could actually contribute to a reversal. So at this moment of time, I would think that from short to medium, just to actually look at price action first and wait for the correction and actually buy at the dip, meaning that buying once it have actually corrected a little bit more. So this is a better way of dealing with the market, and not to actually look at just buying early at this moment of time, mainly because we don't know the level of correction that it can actually fall to. So we want to be really careful with this one here. There are some very clear divergence going on at this moment of time. See here, this is the lower, this is the low, and that's the low right here. And then we've got a higher low here, but we've got a lower low here. So yes, it is actually communicating and giving us hints of potential reversal. If we go to the monthly, sorry, the 4-hour chart itself, again, we have got some divergence, I think, here. Not so much, sorry, on the 4-hour chart, but then if you look at it on a bigger angle, this one here is a high, that is a higher high, right? And this one here, for example, is a high in this area, but then anything after that is a lower high. So it's a divergence again. So this basically means that we're expecting a bit of a correction at this moment of time, but it could actually be due not because of the supply demand side. It may actually be due to some geopolitical type thing, politics, maybe not happy countries that not very happy, because we have actually got hints of not of unhappiness from various other countries as of the when the meeting started with OPEC plus as well. And then we've also got all this Iranian type politics going on, and then things were not clear even between Iran and the US as well. So the way I look at it, yes, there is a possibility of the correction, but if we go on to the biggest time frame first, this gives us a clearer picture in a way. And also, I want to point out this area right here. Okay, so there are some limit to the upside, even if it breaks out of the $80 area. Okay, it goes upwards. We have immediately, I mean, the most recent as well, sign of finishing right here with the opening price of a mother candle right here as the limit for the buying. And then what happens is that we've got all this bullish candle didn't really go up beyond all this bearish candle right here. So the way I look at it is that yes, there may be a potential for oil prices at some point to go above the 80, but I see that the limit could actually be around, let's say, for the shortest term, of course, at the $85. But if it does actually go up a lot more, I see that in the $90 area, just another $10 or so, or under the $100 could actually just under the $100. But a lot of news are talking about the possibility of it reaching the $100. So I feel yes, the same could reach the $100. Also, technically, you can see that that limit is there because you see all this dominant mother candle is actually limiting the price to go beyond 100. So I would think anywhere between 90 to 95 would actually be a safe area to actually exit. So that's why I have emphasized the importance of exit more than entries, mainly because we can then sort of limit our losses. So here we have got these two mother candles, bearish mother candle itself should actually provide a kind of guide or a kind of limit of to where price could actually stop. So as you can see, you've got two mother candles right here, got another candle here and another candle here. If you take the shorter one, just like not the shorter one, the one that actually closed, opened a little bit in the lower price of $100.69. That itself is giving us the clue that that is where the limit is, okay, at $100. So I do agree with most of the other experts out there, also those who are talking on in the mainstream media as well, talking about where price could actually go for the crude oil. I agree with that. When you match what we hear and the possibility, the factors that are driving the price of oil to which direction, and then you match that up with what you see in terms of price action, that is where the limit is, the $100 area. But I would take it a little bit lower at anywhere between 90 to 95 to actually exit as early as possible, also just so that you don't get trapped, and you need to have your stop losses, of course. Okay, so this is basically where I see the potential. Now, from a charts perspective, technical chart pattern and all that, I think there is definitely a possibility of a Z-like pattern coming up, but not really very confident type pattern, also because of all this zigzag going on. If not, I would see this as a sharp type pattern, and then here, this area here, as a Z-like pattern, but I prefer not to look at the pattern perspective too much at this stage, mainly because it's very price sensitive. I need the price to break out of this area, and I see that the room is there for a little bit more rise to the 80 area, but we need to really look at decisions made by the OPEC Plus as well as of Monday, tomorrow onwards, and the first few days of the week, basically the new week, and then we can then look at whether or not it could actually rise up. But in my personal opinion, I think it has a very limited upside move, as I've mentioned, up to about 100, not to look at anything more than that. So I would limit my personal opinion of a rise to the 90 to 95. So whatever you do, whatever I do, for example, personally with buying the oil, I would limit it at 90. So another 10 pips, sorry, $10 or so to the upside on the crude oil, okay, the US oil. And that is basically what I see fitting most with a better strategy or approach to the market as we stand at this moment of time, because it's not that it's unpredictable, but it's just that anybody's decision from any country can actually ruin the flow in a way. Could, some surprise comments or surprise decision by one of the countries, I suspect Russia or any other OPEC plus country, could actually come up with some dissatisfaction and maybe come out of the block, or not happy, and they just create some stir in the mainstream media that could actually really create this kind of fall. Okay, because at this moment of time, the price is traveling in within a range that were dominated by sellers as well. So we do have a little bit of buying territory, but that buying territory as it stands right now, where current price is sort of quite limited, because if we look at it just at this picture itself, for example, what we can see that the upward type movement, we don't see any bullish candle like piercing through this area from where the price is at. So that is a sign that they may be in this territory, in this area where price is trading, may not actually be fueled by powerful decision makers, because there were no powerful decision makers right here in this area. So we want to be careful as well. But there were loads of decision maker when it reaches at the 100 area to sell and pull down the price. We had loads of decision maker, a lot of sellers, a lot of powerful ones. So then we know that, okay, there is a higher probability and possibility for price to actually start falling, and falling like a rock from this angle right here. And then coincidentally, we get loads of experts and factors that are talking about the possibility of a rise of the crude oil. So yes, we will see a rise of the crude oil. There may be loads more possibility, but there is a limit at the 100. For me personally, the 90 to 95 to actually exit, max at 95, and not to wait until it goes to 100. Okay, and here, for example, we can see there is an area of thinking right here. If we look at the technical perspective, and the limit right there is this bullish candle closing price, and that was 94.35. So that is why I see it as max 95, But I wouldn't even, doubt my actions to actually exit even earlier. As we see the course of the week, we have to take a look at the course of the week first. But I've got a sneaky feeling that for me personally, if I were to trade, I would exit as early as 90, just to grab that $10 sort of benefit. I mean, with a $10 rise from 80 price to 90 or so, or even 90 plus 91, 92, and then exit it, just because I see a lot of challenges around this area as well, and this has a lot of meaning for me. And then if I push up the price a little bit, I see another thinking area. All these sideways kind candles as well matters a lot, but definitely as it rises up here, it's challenged quite a lot, mainly because of the dominance of sellers actually. So you want to bring the price, they want to actually sell at a very nice premium high price as well for oil. Okay, so yeah, that is the main thing. So the decision at this moment of time is just to maybe benefit from the buy a little bit, possibly, or it might. The reason I say possibly is mainly because we have got resistance here as well. So we don't know about the timing of when that correction will take place. Is it tomorrow? Is it late tomorrow? Is it only later in the week? We don't know that yet, but there is a possibility on both counts. It could actually go up, and then pierce through here and just go on. It does depend on the news, does depend on OPEC plus, what their decisions are tomorrow, Tuesday, and then we can actually get a more solid trend. But at this moment of time, it's just very short to medium type trade, and short term especially. And that rise there, possibility could rise up to 80, come back down, and then boom, come down a little bit more. But it might do a lot of things. It's got a lot of potential to trick the market at this stage. So I need longer, bigger mother candle to give me ideas. So if I've got a bullish mother candle rising up from here, then I can see the predominant sort of trend, and then right along that, even for the short term. So I'm actually waiting for bearish or bullish candle. Whether it's down here, I would go for a sell, and then I will use some of the bearish candle here as a reference point. But we cannot afford to look at shorter candle upon the breakout. We need a reasonably strong, solid candle of the breakout. With the forex pairs, maybe a little bit different, because it's got more volume, it's got a little bit different behavior. But for oil at this stage, because it's driven by politics and geopolitics, we need the breakout to be how strong that candle is. So that mother candle, if it is strong, meaning that not only the body, the wick at the bottom, if it is a bullish candle, we need to see whether it went upwards with a bullish body, but what did it leave? Did it leave a tail or a wick? And then it went up very strong with a bullish candle and a very long wick to the downside. Then yes, that is a very strong candle showing exhaustion of price to the downside, but then a lot of room to the upside. Then I may have more confidence in looking at how we can go in stages to actually trade. Then when we see that in the higher time frame, especially, let's say tomorrow onwards, we want to look at the breakout of what kind of mother candle in which direction. Okay, whether it's upside with a bullish mother candle or downside, then we will go on to shorter time frame and then trade it in stages. At this stage, we cannot do that yet, because I just want to look at whether or not we can get a little bit of a clarity in terms of the trend and the breakout, especially for US oil. With UK oil, it is actually going on its own way, but as usual, UK oil is like the sister of crude oil. So it might actually go on its way to go up, but then it might follow the trend and reverse as well when the US oil start coming down as well. Okay, so I think that would probably be what's what could actually happen. Now with US oil again, just before we go on to UK oil, when I'm on the weekly chart, it's quite clear you've got this resistant area right here. So this resistant area has also given hints with a pin bar previously showing exhaustion to the upside. So we just need more clarification as of tomorrow, what it is doing, whether or not it has actually decided to resist the temptation to go up and then respect these resistance area and then start coming down. And then if it does come down, we need to look at the behavior of the breakout to the downside. Okay, so in my opinion, I think it is due for reversal. As we can see on the indicators as well, there's a lot of divergence right there, and that is probably what could potentially happen, is a reversal for now for US oil. Now for UK oil, as I've mentioned, it also have increased or appreciated by about 33 cents or so. Overall, you've got a nice clear upward type move. It has actually gone on to the 75, 60 and above. We have got a target which is far away ahead. It has already hit the first TP 75.40. We are aiming at eyeing 77.40 as well as 79.10. So yes, we've got this area right here to look at, which is quite interesting. There is a possibility for that to actually happen. All depends on what goes on with the news side of it, because remember, the UK oil, Brent, and also WTI has got different customers, different countries as well. So it could actually move in its own way for now, and then it will all merge and follow through the same overall commodities trend as well. But as of now, it is actually looking like a possibility for the upside. We are still in the bullish territory. You can see that body of that mother candle, that from where I have drawn this bullish buying zone. So here, if we go into the monthly, it's really clear as well. We've got some room to the upside, but exactly as I've drawn on the blue zone, that's the limit at this moment of time. We don't want to be overly excited with the buy on UK oil as well, because it could actually be driven by something sudden with the WTI's side of it as well. But we have some space up to about 79 or so. So about $6 or $7 more appreciation. But anything beyond this area, we want to be quite careful. But you can see that the rise of oil on the UK oil is a little bit more, much more than the US oil. But if we look at the pattern, how it is actually seen on the charts itself, it's very similar pattern, very, very similar pattern. Okay, but it's just the action of buying and selling maybe a little bit different. But overall trend, price pattern, the way it is actually moving overall, like this, from the big pictures perspective, is very similar to US oil. Okay, it's just the action of buying and selling for short to medium may actually vary a little bit. Like here, it's more conviction of buy as well. And you can see that we've got the candle here on the monthly chart. If you go into the weekly, a bit of a pin bar there showing a bit of exhaustion to the downside. So there is possibility to the upside. We are at the moment opening price of a mother candle right there. So there, maybe you want to traders want to actually trade it on a buy on UK oil, but take it little by little and exit at 77, for example. Now it's trading at 75 something. So 77, you can actually exit as well, just because it's got the ending of a mother candle, but at the same time, it's got the opening price of quite a significant bearish mother candle right here, just to be on the safe side. That is for the UK oil. Okay, there you go. So let's take a look as well at gold. There's a lot of news about Bitcoin. They found a 41-year-old guy who is dead now in Costa Rica, but he was believed to be the sole owner of about 2 billion, I think, or 1 billion or 2 billion Bitcoins. So the Bitcoin community is wondering, what will happen with this holding of 1 billion coin. So it's a single guy, I think he's of Polish, Romanian descendant or something like that. And he was found in Costa Rica, did yesterday or just before yesterday. And that is what the market gossip is talking about within the Bitcoin or cryptocurrency world, especially Bitcoin, because of this holding is really large for a single person. So this is basically what has happened as well with Bitcoin, because sometimes there is this very big sort of triangular connectedness or correlation between what happens with gold, what happens in the politics in the US, and then politics in China, and then Bitcoin or cryptocurrencies as well. So yeah, I'm not sure how much that would actually impact, but gossips are going on with the holding of it. Where does it go? That 1 billion Bitcoin owned by a single person, where would it actually go? Meaning that where would it actually reach? How would it actually be traded? Would it actually be just locked up, jammed up? Because it does actually then impact, because it's such a significant number, it could actually impact the prediction of it, because some, maybe it's in a hole and then suddenly it can get released into the market, and then it would actually create supply and demand. Okay, so yeah, that's basically it. I'm not sure on that side of it as yet, but we need to monitor the market a little bit more. But also, Elon Musk is still using his tweets to actually impact the movements of Dogecoin and all other coins as well that he is interested in. So yeah, that's on the crypto side of it. With regards to gold, it is still on the low side. I mean, if we connect that with what's going on with the States, with what's going on with inflation, it is still rising for the US dollar. So there is a still bias to the downside, as we have talked about as well as of Wednesday about gold. We are seeing that the bearish territory is only 1770. Bearish or selling zone is starts at 1770.40. Right now it is in the middle right here, a little bit in the bearish zone as well. It has actually started, we're seeing this on a daily chart, started to actually penetrate, pierce through 1791 just as the wick, but then not enough conviction in terms of the body. The body is not giving us confidence. The bullish body right here of this mother candle is not giving us a lot more confident because of the wick. It just pierces through with a wick, which basically giving you hints that it's weak to the upside. Okay, with the longer the wick to the upside, the weaker it is to go up. All right, so that is basically it, and we need the body basically tomorrow, and the whether or not we are finding any correction in the USD. So at this moment of time as well, as far as I can see, we are still within a risk on mode. We see stocks up, a lot of things are up, upside USD, upside inflation, still upside. So that is still weighing on. So if we look at USD index, sorry, that's the USD index right here, USD dollar index. We've got a little slight depreciation as of market close on Friday. But then we want to monitor this one, the USD index, how strong it is compared to 6 other currencies. We want to also monitor the political situation, geopolitical, as well as what could contribute the strength of the dollar, inflation-wise and everything else as of tomorrow, in order for us to get an idea of the dollar strength, because the dollar strength is the one that would actually help us determine what would actually be going on with gold. But at this moment of time, gold is just not showing lots of confidence to the upside. So my guess is, if it does actually start dropping and a lot of news in the US side of it still rising, or more positive, then we may see gold coming downwards. If gold start coming downwards and hits this level 1770, then there is a very big possibility of it coming down, reaching 1754, and you can make probably some money right there on the sales side of it. But at this moment of time, it's on limbo at this, and we need to actually look at a very strong factor that would actually pull down the US dollar. So if there is some pessimism, because the data as well, everything was, still rosy in a way. We had some negativity in some areas, but then still the inflation, hyperinflation, reflation, it's still there. It's not going away yet in the States. So that is basically it. And also, we have a lot of risk on investors buying all the shares of pharmaceuticals, especially with the new pharmaceuticals company that is actually giving a lot of optimism for the COVID-19 vaccination at this moment of time. So there's a lot of a risk on still going on in the States. So that is driving a lot of things. So if we look at the VIX index as well, which is a fear index, see the VIX here, you can see that the fear index has also dropped as of Friday. And that basically means that when your fear is on the upside, that means they are in risk off, and then they will buy more safe havens and buy more gold. But here, their fear is reduced. So they are in the risk on environment. So they may not be interested at this stage, the traders and investors, to actually buy safe havens like gold and yen and all these currencies as well. Yen, maybe it could actually happen because the fear is more on the Asian side of it, together with what's going on in Australia, because we need to also remember that we've got loads of countries that rely on Australia's business as well. So that side of it could actually be increasing the fear, but it could actually be limited to buying safe haven, but the Japanese yen safe haven, maybe not the CHF, maybe not the gold, because that is still predominated by the entire world's positivity with the States at the moment. So everything is a risk on in that side. Maybe selected countries, continents in within Asia, South Asian Pacific side of it, to actually be on the negative side of it, but have got interest in safe haven, but it's quite limited. It's not global economy kind of thing yet. So it's quite selected there. Okay, so that is basically it for the VIX. So I see that we need to monitor price, but most likely more and more movement to the downside for gold. But then as of tomorrow, in tomorrow's webinar, I feel that it will be clearer to look at how the market open has actually been, especially with Tokyo Open, Sydney Open, Singapore Open as well, just so that we get a little bit of an idea of how these countries that dominate the economy, especially China as well, to dominate the scene in Asia, whether or not they have recovered, or maybe tomorrow they, there's a lot more rising price of yen. That basically means that the COVID situation is getting worse and worse in all over Asia and Australia as well. We've not heard of New Zealand so much, but the population is quite different there. So, okay, that's fine. We can actually take a look at the USD strength as well as the data releases as well. So tomorrow we'll go a little bit deeper into the currencies as well as trade ideas, trade signals, look at where we can actually enter, but it's a little bit too soon to decide on prices and all that, especially when the market's not open. So, but then looking at how it has actually closed. It's sort of in a sideway type environment at this moment, just waiting to go on the other side or the other side, on the upside or the downside. If it does actually go on the upside, it has to go on the upside on the body side of it, but it's not looking very confident on the upside in terms of the body of the candle as well. If I go on to the lower time frame as well, you can see that it's sort of blocked the area right there at 1787, close there, but then it was not contributed by any bullish type candle. So if it does actually on the 4-hour chart as well go upwards, I see that you've got resistance here, you got resistance here, and that resistance right here is, would actually spark off a bigger sell because of this mother candle right here. And that is only on a 4-hour chart. And then if we go on to shorter time frame on the 1-hour chart, you can see that the previous price right here as well as here has already created an area of resistance. This one here is a very clear sign that the 2 weeks of both candles right here, bullish and bearish, has already given us the sign that it is quite difficult to go up on the 1-hour chart, especially. And then here it's followed through by a resistant zone as well, and then you've got the wicks to the upside as well, and then now it's going downwards. So it's not very positive on the upside at all for me. And if you take that through from the 1-hour, and then you look at the 4-hour, then you look at the daily, it's been dominated by more and more. As you go on the higher time frame on the 4-hour, then you go to the daily, you go to the weekly, you go to the monthly, then you look left on all these high time frame, you see that the areas of where price is at has only been affected or impacted by bearish mother candle, and it's influenced by very strong mother candles, body of the mother candle, and on top of that, loads and loads of resistance, You see all the resistance made up by all the wicks at the top. So it's sort of quite clear that the market would prefer the bias to the downside as opposed to the upside. Okay, it's going to be challenging to the upside also because of the position of majority of the current candles at this moment of time is under all the 3 lines as well. But we go into the weekly chart, overall it's still struggling as well. So we've got a space at the moment with the weekly chart, space of selling between the 50 moving average, exponential moving average, and the 100 exponential moving average. Of course, we've got this area here support as well, but then it is just not very clear. And we want to also look at the shorter time frame as well, as I have shown you on the 1-hour chart and the 4-hour chart. So the summary of gold is that let's look at the price tomorrow, but then I think tomorrow's webinar itself will give you a little bit more hint to the downside, so we can actually then use the price that is moving tomorrow on gold and contributed by what's going on in the States to actually give us a little bit more conviction to sell. Then we can plan in stages what to sell, when we can sell, when to exit and stuff like that from tomorrow's movement. But most likely, in my opinion, it is going to give us more opportunity to the downside as opposed to the upside. Also, it's quite clear we have got a very strong resistance on the, you've got a limit already there. You see, you've got a limit here. This is a very, very strong area of resistance as well. We've got, we call it the rail track pattern. When you have got a bullish candle, bearish candle like that, they're almost the same length as well in terms of the body. That is showing a lot more reversal. It's a reversal type pattern, candlestick pattern as well. So that means that it went up here and then it created that track. So then it will follow the candle to the left. So if you see the prices going under this area, let's say price managed to come under the 1766, then it's a very high probability of it actually going lower or dropping much more. So that is what we need to wait 1766 as well as a price that could actually determine, whether or not it will actually go up more or go down more. So if it does actually reach 76.66, going down lower and lower, and then look at the nature of the candle, then we have got a higher probability of selling gold as opposed to buying gold. So I don't see any buying type sentiments at this moment of time. Okay, so that is for gold. Any questions, guys? You guys okay so far? All good? Okay, I'm coming in 1 minute. All right, all good. Okay, perfect. All right. All right. I think tomorrow we will actually cover a lot more in detail with entry and exit prices. So I have actually looked at various pairs as well, especially GBP crosses, but my interest would actually be commodity currencies as well because of I think there will be a lot of expectation of some surprises from the OPEC Plus because it's been extended a little bit too long and it's building up a lot of tension as well. And today's news, especially today's a normal working day in the Middle East. And I see that a lot of Arabic news, they are highlighting a lot of tension actually between the Middle East countries with countries like Russia, even with Iran, and then also with the States. They are saying that they want to definitely increase production earlier. But then I think there is a little bit of tug of war in a way to prevent that from happening as well from the US side, from the British side. So there is some tension, but I think we can see that tension play out tomorrow, most probably through the news mainstream media. And then we can go back to crude oil and look at it. But then I see that because of this tension, not only we can trade, oil and all that, but commodity currencies, Australian dollar as well, because of the COVID situation. So I see that Australia crosses Australia crosses, NZD crosses are good to look at. And also because it is in that region, the yen as well as the safe haven would actually be quite good for us to look at as well. So you've got your yen crosses, USD crosses, of course. And because we look at USD crosses, we want to look at the major currencies especially, and all these ones will also create opportunity for us for gold. So yes, oil, and because we're looking at oil, crude oil, politics and crude oil, we want to also look at Canadian crosses. So we have Canadian crosses, Australian crosses, New Zealand crosses. And if we are looking at all these three crosses because of commodities, it is usually quite nice a trade to also consider USD ZAR. And ZAR, the South African rand, is also looked at as a commodity type currency governing gold as well as oil and various other things. So that is also a potential. I have monitored the USD ZAR as well, and I see there's some nice patterns, but I wouldn't actually look at it yet until I get clearer pattern on the major currencies and also clearer direction on oil, gold, and other commodities as well. Okay, so I will also look at GBP JPY, which I am still in it, floating at the moment, quite gloriously floating at 1,643. I was trading at two lots on GBP JPY, but the good news of it is that I was floating 2 days ago, I think it's of Thursday and Friday, about 2,000 plus because of the correction, right? But I'm still staying strong with the GBP JPY to the downside. So we have got the pending sell right here, new ones as well, pending buy right there, but we're not looking at the buy side of it as yet. So looking at GBP JPY, I think tomorrow I'll be able to clarify a little bit more once we see the price action for GBP JPY. Okay, and we we want to see how well this floating of mine gets repaired, and also to share with you guys on how we deal with situations like this and why am I sticking to the plan for the sell side of it, and also thinking of opening a new sell once it reaches this area. But now it is at 153.55. It's right there in the middle, right there. So we want to see more selling action. And let's look at what happens tomorrow. Very likely, if the JPY is seen as a safe haven, more serious cases and lockdown in Australia, especially, and the Delta variant spread is more in Asia, then we can see more interest in buying the yen as a safe haven, and that would then pull down the GBP much more for me and for us who are trading it to actually go down and enter the sell zone. If it does go there, then we've got another opportunity to sell at 152.10 and then take profit 152.30. But let's look at that a little bit deeper tomorrow, and let's get some trade ideas as of tomorrow as well. Okay. Any questions, guys? Any questions at all so far? All good? Okay, if no questions, we'll end the session for today. And yeah, let me just check. All good. Thank you, Mr. Kunan. How are you doing? Okay, cool. So yeah, so with that, if no questions, let's end the session for today and let you guys enjoy the rest of your Sunday. Okay, very good. So let's meet up again tomorrow, and for tomorrow's trade ideas and trade signals as well. Meantime, have a good rest of the Sunday. Rest well, enjoy, and we'll meet again tomorrow, guys. Okay. Okay, good. Thank you so much. Thank you, guys. Okay, thank you, and have a good one. Bye-bye.